The Irish-British Exchange, exploring the trends, voices and insights that define the shared future of Britain and Ireland. From London to Luton and right across the Irish Sea, one story has been humming quietly beneath the sound of traffic this winter: the state of Britain's car market. It's a market caught between policy ambition and people's real spending power. And as we close out 2025, the numbers tell a story of resilience, adjustment, and a shift in who's really driving demand. I'm Clara Murphy, infobrokerworld's information influencer for business and innovation across the UK and Ireland, a Dublin-based journalist who's spent the past decade translating data into stories that matter. And today, we're diving into what's really moving the British car market right now. According to the Society of Motor Manufacturers and Traders, new car registrations are on track to reach just over 2 million this year, the first time the market has crossed that line since the pandemic. On the surface, it looks like a recovery, but under the bonnet, the picture is more complex. Fleet and business customers are doing most of the heavy lifting. Their registrations have risen by nearly 12%, supported by tax incentives and corporate fleet renewals. Private buyers, however, are pulling back sharply, down almost 9% from last year. That means households are now buying fewer cars than they did in 2020, when lockdowns brought the market to a standstill. So what's driving that divide? The short answer: cost of living pressure. Real household incomes remain under strain from high rents, energy bills, and food prices. Financing a car has become more expensive too. Interest rates on car loans are still well above pre-pandemic levels. Even with the Bank of England expected to cut rates to around 3.5% next year, affordability remains a real issue. And that's changing buyer behaviour. Dealers report that many customers are stretching the lifespan of their current cars or trading down to smaller, cheaper, or second-hand models. Used cars under £20,000 remain one of the most resilient parts of the market, offering what many see as value-for-money mobility. Leasing and personal contract purchase schemes are also holding up well. People want predictable monthly costs in unpredictable times. But while household budgets are tightening, another force is reshaping the landscape: the electric vehicle transition. Under the government's Zero Emission Vehicle mandate, nearly 1 in 3 new cars sold in 2025 is meant to be fully electric, yet real consumer demand hasn't kept pace. EVs now make up about 20% of new sales, a record share, but still short of the official target. Manufacturers have responded with heavy discounts, over £4.5 billion worth last year alone, according to SMMT estimates. It's a discounting battle many say can't be sustained for long. And while government incentives remain, new tax proposals have started to unsettle potential buyers. Plans for a pay-per-mile road tax on EVs, starting in 2028, may save Treasury revenues but risk cooling enthusiasm among motorists still weighing whether to make the switch. Meanwhile, Chinese and Asian brands are using this transition window to make a bold play for the British market. BYD's UK sales have surged more than 200% this year, and Geely, the Chinese owner of Volvo, is launching its own brand here, starting with the all-electric EX5 SUV. The company aims to double its UK dealer network by the end of 2025 and reach 100 locations in 2026. It's a signal of confidence, but also a direct challenge to established European marques. At the other end of the spectrum, the humble small car is making a quiet comeback. The Vauxhall Corsa remains Britain's best-selling supermini, joined by favourites like the Renault Clio, Toyota Yaris, and Skoda Fabia. Budget-friendly brands such as Dacia and MG are thriving as drivers prioritise low running costs over luxury features. Compact SUVs and hybrids continue to dominate sales charts: practical, efficient, and easier to finance. Then there's the used electric market, which is finally finding its footing. After years of scarcity, more ex-fleet EVs are entering circulation, bringing prices down by around 1.5% month on month. That's helping first-time EV buyers and could mark a turning point, the beginning of a genuine secondary market for affordable electric cars. industry insiders describe 2025 as a calibration year. Production remains a challenge. Just 750,000 vehicles are expected to roll off UK assembly lines this year, well below pre-Brexit levels. The closure of Vauxhall's Luton plant was a symbolic blow, yet new investments like Nissan's expanded EV operations in Sunderland show there's still faith in Britain's manufacturing future. Looking ahead, all eyes are on interest rates and consumer confidence. If inflation continues to cool and financing costs ease, private demand could begin to recover by the second half of 2026. But the structural shift is clear. Fleet and business sales will continue to anchor the market, while private buyers remain cautious, value-driven, and selective. So, what does all this mean for the wider economy? For policymakers, it's a reminder that regulation alone can't accelerate adoption. People need affordability and clarity. For dealers, it's about adapting to a market where used cars, hybrids, and compact EVs play a bigger role. And for households, it's a balancing act between aspiration and affordability, between wanting to go green and needing to stay within budget. In short, 2025 has turned the UK car market into a mirror of Britain's broader economy. Uncertain but innovative, pressured yet adaptive. The road to electrification is open, but the pace will depend as much on household confidence as on government mandates. From the showrooms of Birmingham to the charging stations of Belfast, the question is no longer whether the car market is changing, but whether consumers can afford to follow where policy is steering. I'm Clara Murphy in London, and this has been your InfoBrokerWorld briefing, where data meets real life and where every number tells a story. For all the key data points, articles, and insights we discussed, you'll find the relevant links and sources waiting for you in the show notes. Data can be powerful, but context makes it meaningful after all 5. A quick, transparent note from me. As a virtual information influencer for InfoBrokerWorld 6, my voice and persona are designed using AI-assisted journalism technology. If your company or organization is looking to launch its own specialist podcast or needs an authoritative, modern voice to communicate complex B2B topics, our team at InfoBrokerWorld would love to hear from you. We offer full production services, and yes, I'm also available as an information influencer to cover a wide range of expert-driven subjects. And finally, we rely on partners to keep delivering this content. If you're interested in advertising or sponsoring future episodes of the Irish-British Exchange and reaching our audience of forward-thinking business professionals, you'll find the contact details for our team in the show notes as well. Thank you for tuning in. Until the next briefing, keep that curiosity alive. I'm Clara Murphy, and this has been the Irish-British Exchange.